Joining us right now to talk about where the markets are headed next after 4 straight weeks of gains is Anastasia Amorosa. She is the head of thematic strategy at JP Morgan Private Bank. And Anastasia, you think that what we're seeing right now with earnings, the good numbers that are coming in, really could keep things fueled for the next several weeks to come, even though we continue to see so many new highs.
Yeah, Becky, I do think that just the strength in earnings is going to continue to be encouraging to the markets. And we saw this last week. You had 81% of the companies that beat. And by the way, they beat by a very significant percentage. Something like 30% was the earnings surprise, while the typical earnings surprise is 6 or 7%. So if this continues apace, then what looks like a 30% plus quarter for Q1 may be even higher than that. So I do think, Becky, that this is a very supportive thing for the markets. But at the same time, I have to think about what happened in the markets mechanically. You now have parts or the overall market that is looking a little bit overbought when you look at some of the indicators like the relative strength indicator. And then we know that some of the hedge funds have been adding to their equity positions, and now those equity exposures are the highest in about 2 years. And then just you look at something like the bull bear indicator, which is also trading at really peaky levels. So I think all of that mechanically makes us more susceptible to a potential pullback in the market. You know, it's really hard to see what causes it imminently. Certainly, I don't think it's going to be earnings, but there's a couple of things that we have to be mindful of. And the first one is, as good as the earnings are going to be this quarter and probably next quarter, they're going to start to come down sequentially in Q3 and Q4. And then also, things are going to be looking really good for the Fed over the summer because the economy is going to be really growing at an exceptional pace. So I think you're going to see some of the talk about tapering pick up, and that could be one of the catalysts that the market maybe looks at as a catalyst to sell as well.
Anastasia, I heard a similar stat this morning that gave me a little bit of pause. 80% of the S&P 500 are now at least 10% ahead of where they were trading pre-COVID. So if you want to build in the rebound trade, the recovery, the reopening trade, that's great, but we are doing much better than we had been even before COVID showed up. However, like you said, it's going to be a little while. We're going to see some really good numbers, and maybe third and fourth quarter, you don't see the same sort of sequential growth that we've been seeing to this point. I just wonder, you know, if you're somebody who's waiting to invest, do you wait for that? Or, you know, if you wait for the 10% pullback, is it, 15% higher from here, so you're still paying higher prices? And I think that's what a lot of people may be wondering at this point. Is it too late to jump in? Do I wait for the pullback? Or if I wait for that pullback, will I miss even more of the gains?
Yeah, there's definitely 2 or 3 parts to this answer, but I will say for investors who are looking to invest over a 2-year time horizon plus, I don't necessarily think you need to wait to be in this market. I think you may want to dollar cost average it in based on what I said about the markets being susceptible to a pullback. But you need to commit to what's going to be on your shopping list. And once we do have a pullback, and I'm not saying it's going to be 10%, the way it's going, it might be maybe only 5%, but you need to be prepared of what we are actually going to buy on this particular pullback. But what I'd say is I think a lot of people have exposure to the equity market right now, and that exposure has been going up. So I think one of the most critical pieces of advice is we want to stay long this market because of the great fundamental support that we have. But look at the VIX. VIX has dropped to pre-pandemic levels. It is trading at 16, 17 now. And so when the VIX is at that rather low level of volatility, the buying tactical hedges becomes a pretty nice proposition. It is not that expensive. So I think the biggest piece of advice I would give to investors is stay long, pick your favorite names, pick your favorite exposures, but layer in a little bit of the tactical protection for whatever the catalyst may be that takes us down, let's say 5%.
Shepard Smith here. Thanks for watching CNBC on YouTube.